Welcome to Breaking Banks.
Welcome back to Breaking Banks. This week I am your host with my good friend JP Nicols, no H, co-hosting. So that's sort of an internal private joke, but it never gets old.
It sounds the same either way.
It does. All right. So we are going to be talking about RegTech today, specifically the new RegTech Manifesto that has been launched by the Alliance for Innovative Regulation, looking at redesigning financial regulation for the digital age. And to introduce that topic, we have joining us Joanne Barefoot. Joanne is, of course, the CEO and co-founder of the Alliance for Innovative Regulation. She's a regular contributor here at Breaking Banks. Joanne also runs Barefoot Innovation. So, Joanne, welcome back to the show.
Wonderful to be back, Brad.
Also joining us is Mark Chorazak. He's the partner in Global Financial Institutions Advisory and Financial Regulatory Practice of Shearman and Sterling, a leading international law firm. His practice centers on providing strategic bank regulatory advice to domestic and foreign banks, non-bank financial institutions, and Fintech firms. So, and a bit of a quote from Joanne on this: if data is the new oil, the financial regulators will soon run low on fuel. People think you can't really change the financial regulatory system much, that it's too complex and it's too much inertia, but that's wrong. The system will change because it has to keep up with the exponential pace of technology change and the digitization of the industry being regulated. We can be sure of this because it's already happening around the world. So that's a good way to sort of start us off. So, Joanne, you've been in the regulatory space for a long time. What's different this time?
Well, I have been a bank regulator in the United States and worked in and around the regulatory world, mainly focusing over the years on financial inclusion and through trying to get it done through regulation. And, you know, we've probably made some progress there, but if we step back and look at it, we can see that we're not really succeeding in having an inclusive financial system that doesn't hurt people. And we maybe have been doing the best we could. I'm not critical of what the regulators have done. They've had the tools they've had. But with digital technology, we can completely redo the entire system, and we have to. The industry being regulated is digitizing rapidly, as you talk about every day on Breaking Banks. And if the regulators don't do the same, they won't even be able to see what's going on in it fast enough, in real time, with complete data, using AI to understand what the big trends are. And so the risk will rise in that gap between where the industry is and where the regulators are, and we're going to have to close it.
Well, one of the things that you talk about in the manifesto is the inability to properly track anti-money laundering regulations, right? 99% of it actually does slip through the cracks. So that's clearly an area where RegTech and kind of upgrading the technology infrastructure will really help one of the major jobs of the regulators to do.
Exactly. That's one of the areas where there's the most consensus about it, because almost no one defends what we have today. As you say, the UN estimates we have about a 99% failure rate. The numbers are at least $2 trillion a year being laundered and not caught. And the reason for that is that the criminals and terrorists have good technology, increasingly have good global networking tools that can hide these transactions. And the good guys, so to speak, the banks and law enforcement, are using old technology and have trouble sharing data. And so we have to fix that, and we can fix it for sure. When you have enough data in hand and you can use it in real time, you can see these patterns. The machine learning algorithms can find these patterns of crime and really begin to fight this. And people think of the AML, anti-money laundering, as white-collar crime topics. But remember, this is paying for terrorism, trafficking in human beings, and endangered wildlife, and drugs and weapons. We at AIR are getting ready to put on a tech sprint this fall on using these techniques to find trafficking in online child sexual abuse material. And we just need better tools because there's an epidemic of these kinds of crimes today.
Mark, from a legal perspective, how is sort of this framework maturing in the light of the fact that the criminals have all the tools? They're using the AI and the brute force stuff and so forth. How is the law catching up from a technology perspective? Like one of my biggest bugbears is the CRA, 1977, designed for financial inclusion, says branches are the ultimate in financial inclusion. But, that's clearly not the reality today. So where are we at on the sort of legal reform stuff?
A great question, Brett. I think in some sense, that's the question that has to be asked in so many legal fronts right now. You mentioned the CRA from 1977, but there's a whole host of laws that are from decades ago, right? Whether it's the Fair Credit Reporting Act, whether it's our architecture around data privacy and safeguarding, which is from the Gramm-Leach-Bliley Act, which is, of course, 21 years ago. So there's this, we have a landscape of outdated laws, which obviously have very important statutory purposes, but they were created in a time that, in a very different time in our country, a very different time in kind of how commercial transactions were conducted and how business and transactions are done by everyday Americans. So I think, the question I think is a really important one, which is, instead of merely thinking about creating new laws on various points, of our existing laws in the books, how do we modernize them? And we can modernize them through, thoughtful regulation that's consistent with the underlying statutory purposes. But that is, I think, a real challenge, not just for regulators, but for the industry, is that we have this very, outdated set of rules. I just mentioned, FICRA, you mentioned CRA, but there's a whole host, right? I mean, when you think about the revitalization of the Bank Secrecy Act in 2001 after 9/11, well, that was, basically 20 years ago, right? It's incredible to think that, we still are, trying to fit modern day problems through an outdated legal architecture. And I think, when we look ahead in the next few years, I think there's a ripe opportunity for Congress to think about, whether we need to modernize our existing legal and regulatory architecture to fit new problems.
Yeah, I just find it so ironic that I'll say the regulators, right, as a massive monolith, all regulators from every agency in every country. Of course, it doesn't operate that way, but there is a view where often we look at disparate impact, right? Even though you had good intentions and you followed the letter of certain laws here, but there's still disparate impact, so we need to do something different. And I think what you're saying is kind of the flip side of that, right? Do we want community reinvestment? Of course. Do we want fair credit? Of course. It's how we apply that and what's the impact of the way maybe the regulations are written, but certainly the way that we examine and search for compliance today.
I would comment on that. That's such a good example of an area where, with better technology, there's increasing agreement that we can underwrite more inclusively with new kinds of data and with AI and not have to sacrifice the soundness of the loans. We can, the tools we use today are, they were great in their day, but they're very limited in the granularity of the information they can look at. And yet the marketplace is stuck in the past because of regulatory fear that if you try something new, it might have a disparate impact, and we don't know what the rules of the road are. So it's one of the most promising.
Safer to leave it as it is, right?
Yeah, it's one of the most promising areas where we could have more inclusive lending if we can use the new tech tools and have the regulators comfortable with how they work.
Yeah, I think if we look at just that problem of how you would regulate for money laundering, for example, when the FATF rules were written back in, it was the 1980s, right? When the first rules came out. When we did that, it was largely suspicious transaction reports were submitted on paper, written by someone because, someone had done a $10,000 deposit, and it was anomalous. And yet, when we look at the amount of money flow around the world today, then it's more like it's a problem of solving. It's almost like internet security experts trying to solve the problem of hacking and brute force attacks and things like that. It's a data problem. But that requires a couple of things. It requires cooperation between regulators to share that data, and it requires a very clear sort of data policy, built into legislation, neither of which we really have today. Would you say that's correct, Joanne?
I would, but I'm very optimistic, you know this, Brett, that we are going to solve this. It's a monumental undertaking, but the cooperation is growing all the time. There's many, many regulators are stepping up and starting to really move into the digital age. And the second thing is, you've mentioned that we've put out our so-called RegTech Manifesto, which, by the way, is a request for comments. We would love to have people comment it online or just send us messages at our website. But we are feeding the results of the manifesto into what we're calling the Regulatory Design Project, which we hope to launch next year at our nonprofit AIR, and tackle the issue of data standards for regulatory information. If we're really going to have an interoperable system that can look at data in full sets and again in real time, our regulators today are often looking at small samples of data. They're doing things like reading quarterly reports, which are, stale before they even arrive at the regulatory agency. If we're really going to fix that, we need to deal with the foundational data layer, and it should be open source. And so we're going to try to put that together so that everybody can communicate with the same information.
Joy, would you drill down just one more layer on that? When we say being able to access the data directly through open source, talk about what the process is today, how manual that is, and how much different that could be if we can achieve the things in the manifesto.
Yeah, the system that we have today, and again, this is no one's fault, as we said before, I'm a former bank regulator, was designed on paper decades ago, centuries ago in some cases, and it's an analog system, and it imagines pieces of paper, and then later some automation of that same architecture moving through a sequence of processes. And we know that when we digitize something, pull it out of the analog era and into the digital age, we can turn anything into a digital object that we then can do anything with that we want. The system today was designed the way it is because in the old days, data was expensive and hard to get in that analog form, and the computing power was limited. And now it's not. So if you think about digital photography as a metaphor for it, we can get data into a form where once you've taken that digital photograph, you can do whatever you want with it. You can mix and match it and edit it and send it and analyze it forever at almost no cost. And that's the kind of system that we need. So regulators and risk managers in the industry can get all this rich information in hand and use sophisticated tools to figure out what it's telling us.
Right, agree. Now, Mark, despite the fact that we've got lots of players who are digital only these days, there still tends to be, particularly at a state regulation level in the United States, there's still these examiners going around saying, where's the signature on the piece of paper and things like that. So what's your perspective on those pain points for users of the financial services system caught in these sort of outmoded expectations?
Well, I think from a customer perspective, it's absolutely maddening, right? I mean, there's a lot of studies on what Gen Z and millennial customers are, how they're approaching banking, and there's a reason why the idea of walking into a brick and mortar branch. Now, granted, we're in a pandemic and a lot of branches are closed, but still the concept holds that the idea of being 25 years old and going into a branch to talk to a branch representative about a loan is about as painful as being
going to the dentist.
Right, as going to the dentist.
We have statistics on that, by the way.
And so consumers would much prefer to be laying on their couch and scrolling on their phone, looking for rates, comparing rates competitively, and there's less of a of an allegiance to, one financial service provider for all things. So in some sense, it's a challenge on the traditional supermarket model of banking that obviously came about in the early 2000s after Graham Leach. And so I would say, they're for banks, traditional, financial institutions to evolve and to be successful, they have to meet the moment. They have to respond to consumers. And by the way, I think it's not just young consumers. There's this perception that it's just Gen Z and millennials. I think, certainly I was speaking with my parents who are both in their 70s the other day. And, for the first time in their life, they're like scanning checks on their phone. And the idea of going into a branch is no longer appealing. And so there's one aspect of this pandemic is it is a real accelerant of trends that probably would have been, going about slower prior to the pandemic. But I think to answer your question, Brett, there's certainly a real need by consumers, a real desire by consumers to have much more responsive, frictionless contact with their service providers of all kinds.
Yeah, Joanne, maybe sort of looking at this from a global perspective. I know with the manifesto, you've got a lot of detail there, and naturally because of your work in the US system, there's a little bit of the focus is on the US, of course. But from your perspective, seeing the other regulators around the world that are sort of attacking these problems, do you rate any other markets that have done particularly well on this compared with where we're at, say, in the US?
Yeah, absolutely. I do think the UK has been ahead and continues to be ahead. The Financial Conduct Authority in the UK took the lead with things like regulatory sandboxes and innovation by regulators. And they followed that up with RegTech initiatives such as tech sprints. And they've been really creating a leadership role and frankly exercising some courage in doing that, sort of going first in a lot of ways. The Monetary Authority of Singapore stands out as another, and then there's a lot of RegTech innovation all over the world. There's a lot in Africa. Australia has been a leading country in a lot of ways. Just on the regulatory reporting itself, people are moving to digital regulatory reporting in which potentially a regulatory requirement could be issued by the regulator in the form of code that could be plugged into the system of the bank or the financial company and automatically self-implement the change. Now that's a kind of a moonshot vision, but a lot of people are working on this. The UK has a big project on it. I'm a judge in the G20 tech sprint, which is a global tech sprint. And it has a digital...
And those tech sprints were sort of really pioneered by the FCA, weren't they?
They were invented by the FCA, and then we, AIR and others have emulated it. Can you hear that background noise?
Oh, yeah. It's pretty intense. All right, we might go to Mark for the
construction zone, Joanne? Are you in a construction zone?
I wasn't, but suddenly I'm in an apartment building. There's something going on.
Maybe it's the regulatory architecture literally being redesigned.
Joanne calls for it to be torn down and rebuilt, and we're hearing it live.
It's happening. I love it.
Well, we have the same thing here. I tweeted out earlier in the week. I'm for common sense regulation on power tools now because every house around me is undergoing some sort of construction project. Plus, we've got a major road construction behind me. One of the things, Joanne, I want to ask you and Mark, get your thoughts as well, is when I talk to leaders at traditional financial institutions, there's a lot of talk of, so-called leveling the playing field. And it's kind of the old Princess Bride. You use that term. I'm not sure it means what you think it means. And I think many of them think, well, would you please put similar pain on fintech so that you can kind of drag them down to our level? But what you're talking about here is actually going to work the other way around, right? If we enact some of these things in a RegTech Manifesto, the digital native
lifts them up, yeah.
Right. They're going to be the ones that are, kind of with the program quicker. Are you hearing from leaders of traditional financial services? Are they thinking through kind of the second order effects of this?
They are starting to, and they're within financial institutions. There's a second group, which is the large versus the small. And as your listeners know, in the United States, we have thousands of small banks that carry a very disproportionately high regulatory burden because they don't have the scale. And if we do this right, which we may not, but if we're smart about how we roll out the regulatory change, we should be able to bring these costs down for everyone, and particularly for smaller institutions. I mean, digital, let's, step back and think about it. It makes things better and cheaper at the same time and faster. And we've always in the past had to choose between cheaper and better in regulatory work. And now we don't. So if we can make this shift, not only can we bring down compliance costs and improve the competitive landscape, and by the way, also open the door for new entrants to come in without having to deal with these high costs that we have in financial regulation, but we can also make the whole sector more affordable for people. I was at Harvard for 2 years and issued a series of papers there in the Kennedy School and looked at these regulatory costs. And they are a very substantial part of the cost of financial services. And again, I'm not blaming that on the regulators, but it's a lot. It's hard to measure, but whatever metric you use, it's a lot. So if we can bring those down, we can just open more doors to more people being able to come into mainstream financial services.
Mark, what are your thoughts on this?
Absolutely. I think, technology can, in addition to, making financial inclusion and access a real thing, I think it actually, can meaningfully help with supervision. And that's one of the things that I'm quite interested. I know, Joanne, you were mentioning just the antiquated nature of call reports and regular reporting. But think about how much more responsive and how much quicker supervision can be if our regulators had much more quicker in time access to trends and loan books or trends and data breaches and the like across the financial system. So I think that's something where if there's one thing that there might be, common agreement on, or at least genuine interest, both from the regulated institutions, but also from regulators themselves, I think it's improving that reporting process. On the issue of leveling the playing field, I would say, the fintech or the non-bank sector, of course, is going to mature with time. There's already a vast spectrum today between the two people in a garage starting a payments app to a very sophisticated fintech company that's a public reporting company. So I think naturally as the fintech space evolves, you're going to see regulation of that space evolves. I would say, as a lawyer, one of the biggest misconceptions is that the fintech space is unregulated, and it just couldn't be further from the truth. There's a very important role.
Absolutely. Having run a fintech, I absolutely wholeheartedly agree.
But the real question is, how is regulation evolving for that space, and whether it's responsive? What's the dynamic between federal banking agencies and states? And obviously, that's been a real source of tension and litigation in the last few years on some fronts.
So let's drill down onto that, actually, because that sort of raises the next question. And Joanne, I know you've done a lot of thinking about this, but the way I'd frame it this way, and there's a lot of talk about the regulatory structure in the manifesto, but we've got a number of things that are really going to dramatically change the way we think about access to financial services and financial services in general. Most notably, we see a lot of identity reform taking place globally. We've got the ANPR being offered or being issued recently by the CFPB, which is, again, talking about data access around that as well. But so we've got identity reform, and then you've got artificial intelligence being injected into financial services in many areas. And there could be an argument for regulating artificial intelligence and regulating identity quite separately from financial services because they have broader implications. And so, how's that potentially going to change and the other technology stuff that you're talking about? How does that change the number of regulators in the market, for example? Are we going to see, as we start to redesign this stuff, do we see regulators merging? Do we see regulators being, replaced by some other function?
Yeah.
You want to hit that, Joanne?
Sure. Before I answer that, I just want to mention on the call report, the FDIC has a project to modernize the call report and the data underneath it. That's a very exciting initiative here in the US on all of this type of work. I think these issues of data use, privacy are the hardest cluster, and it's a cluster of issues that touches everything that we're talking about. And,
it's a cluster, all right.
Sorry about that. Yeah. You know what I mean? And by the way, I also think that in the US, as we approach the election, people should be mindful of the potential that if there is a Biden administration and a Democratic Senate, a lot of privacy issues that have been sort of quiet for a long time, even slowly gestating, may be likely to start to move quickly because everyone is concerned. The concern about the big tech companies, the concern about election integrity. There's a lot of high profile issues surrounding these issues, and some of the proposals would create a new agency to handle the privacy and data use per se. As you say, Brett, these issues are much, much bigger than financial services. I think financial companies fall into a little bit of a trap of assuming that they won't be affected because we have the special the special Gramm-Leach-Bliley carve-outs in finance, but that's not what we're talking about. We're talking about how you use data, and financial services will be in the middle of that with all kinds of sensitive data and uses of data. So I think we should fasten our seatbelts for a lot of change, and I guess my biggest message on it is that I think the fintech world needs to tell the story of the upside potential of fintech to serve more people better, more affordably, including for small businesses and for consumers, because there's a risk that with our concern about use of data that we could squash out some of the great potential that we have in the fintech realm, which is relying on new kinds of data. The CFPB has stepped up, taking another look at this issue, which is good, and it's going to be a very, very interesting. And digital identity, as you said, Brett, is going to be a key to it. For sure. We need to go there.
Well, and let's talk about something that's kind of in the news now as we're talking about regulation. The CFPB announced a plan to issue an ANPR on consumer authorized access to financial data. There are 5 lawsuits against Plaid right now that have all been consolidated, and the allegations range from lack of information provided to users to the improper use of their data. What does this mean for the fintechs and the other data aggregators, and what does this augur for future regulation?
Sure. Certainly it's another sign that consumer data is at the forefront, will be at the forefront for many years to come, and the classic need to have sound disclosures, robust disclosures, meaningful disclosures on how customer information is being used. That's going to be, I think, an ever-present concern by not only the CFPB, but other agencies, whether it's the FTC or the banking agencies and the like. And, I would say, we at Shearman, we have a group called the Fintech Foundry, which is sort of a think tank within our firm to centralize our own thought leadership on fintech issues. And one of the things we have is a fintech salon, which is basically a means for us to just bring together a broad group of people to have conversations. And one of the things that we often hear from fintech clients is, it relates to this litany of regulators, this broad landscape of regulators with different statutory and regulatory mandates or interests. And often there is, a conversation that evolves in terms of, which agency is doing what, how come there's not more coordination? Should we have consolidation of regulators? Some of these questions are emerging, and obviously, that presents a lot of difficult operational questions. And the idea of consolidating regulators is never an easy one to pursue. But I think there are healthy questions that can be asked in terms of how should regulators be approaching these very difficult questions around consumer data and access. And apart from the banking agencies, I would note that you're already seeing for several years now that transactions that involve foreign acquirers or foreign investors are having significant scrutiny by the Committee on Foreign Investments in the United States for very important purposes. And so I think that scrutiny is certainly going to continue in the years ahead, whether there's a new administration or not.
But isn't part of this also about giving consumers access to their own information and the choice of what to do with it? I mean, that was certainly some of the things that led to some of the regulations in the UK and across Europe with PSD2. And so far, the US, in my opinion, seems to have been just mostly taking a hands-off view on that. Well, we'll kind of let the companies fight it out. So you've had...
Yeah, I think, JP, there's not really a consensus in the US as yet as to whether the data is owned by the customer or it's owned by the institution, is there, Mark?
Well, maybe that's exactly where we need to start.
Yeah, I mean, certainly, our outdated privacy notices that you get in the mail or by email, which are an outgrowth of Graham Leach, don't meaningfully communicate how a customer can, who owns the data, how can data be shared or not shared. But JP, I mean, you mentioned about, I think maybe you were alluding to in the European Union, this concept of the right to be left alone, or I forgot.
You're right to be forgotten in Germany. Yeah. But even beyond that, just kind of really what Brett said, this idea that, hey, that's my data. And if I want to use a third-party app to do some forecasting or budgeting or whatever, that should be my right. And we've had banks that have blocked access to Plaid and others, right? Mm-hmm. And so I'm just really curious about where this goes, and if I'm hoping that we put the consumer at the center of wherever it does go.
Yeah, we've seen both Chase and Wells, for example, block MX and Plaid and others from accessing customer data.
Sure, I think probably all of us on this webcast or this podcast today probably have the experience of having to log off or log back on to some of our apps because certain information is not being uploaded from our own financial providers onto an app, and I think that's a legitimate source of complaint by customers, and I do think that you're going to have much more pressure by consumers, in the direction of in the direction of regulators to resolve those questions. But at the moment, I don't think there's any, easy answers. There's certainly not, any kind of hard and fast rules around this. And I think it's, something that's going to be a focus for the agencies.
Well, we'll keep our eyes on this. There's certainly a lot more to be said about that. And Joanne, certainly a lot more to be said about RegTech and the RegTech Manifesto. So we're going to have you back on again here in the coming weeks. And I think we're going to have Nick Cook from the FCA on with you. We can go even deeper into the RegTech Manifesto. So Joanne and Mark, thanks for joining us this week on Breaking Banks.
My pleasure.
Thank you. It's been fun.
As promised, Joanne Barefoot returns to the show. She's a regular contributor to Breaking Banks, CEO and co-founder of the Alliance for Innovative Regulation. And as we were talking last time about the RegTech Manifesto, redesigning financial regulation for the digital age. And joining Joanne today is Nick Cook. He's the Director of Innovation for the FCA, the Financial Conduct Authority, the primary regulator in the UK, and the FCA's representative on the European Security and Market Authority's Financial Innovation Standing Committee. He's also an advisor to RegTech for Regulators Accelerator Program, and he's responsible for implementing the FCA's data strategy and reforming the way the FCA collects, governs, and uses data to inform its decision-making. So, Joanne, last time we were talking a little bit about the RegTech Manifesto, and we got into a whole lot of other RegTech topics too. Where do you want to pick up this conversation, and where do we want to bring in Nick?
So, first of all, thanks for having me back and talking about our favorite subject, the RegTech Manifesto. And I'm especially happy to have Nick with us. For those who don't know, the FCA has been leading globally on regulation innovation, and Nick leads that work. So we're thrilled to have him with us as well. So on the prior show, we got to lay out the basic vision for what we're doing with this. We at AIR as part of a much larger community, have been recognizing that we need to modernize the financial regulatory system for the digital age. We need to turn it into a digitally driven architecture and start to get information into forms where people can use it the way we use anything else in the digital age. So we have put out the paper. We've intentionally given it a provocative name as a manifesto to try to separate it, differentiate it from the white papers of the world. And we've also put it out as an RFP, and we hope a request for comment. We hope people will comment on it at regulationinnovation.org. We're getting lots of great input coming in. So I think we talked last time, JP, quite a bit about why the system needs to be re-engineered. That's blindingly obvious, I think, to a lot of your listeners on Breaking Banks, but not to everyone. But it's going to take a long time to do it, but it's urgent. I recorded a podcast this morning for my own show, Barefoot Innovation, where we talked about Bill Gates's famous quote that we tend to overestimate the change that will happen in 2 years, but underestimate what will happen in 10. And we think that this is going to take years. Some parts of it will take decades to work its way to be implemented, but we have to start now. We need to create the architecture now. And if we don't, we're going to find that the regulatory system, the risk management function of our regulatory processes are going to fail. They're going to fall behind the curve, and bad things are going to happen because they can't keep up with that. So in putting together the manifesto, we've again laid out that argument for why this is urgent. And then we've tried to turn to the question of what would this look like? And I think this might be a great moment to get Nick in, because Nick, a lot of what we have in the manifesto has been inspired and informed by looking at the groundbreaking work that you've done at the FDA. So let me ask you what you would think of as the driving forces for why we have needed to switch to build out a RegTech approach, and what you think are the main attributes that we need to have.
Sure. Thanks, Joanne, and thanks, JP, for having me. So I guess there's a few things. There's just the reality that the markets we supervise, monitor, and indeed the consumers we serve to protect are operating in an increasingly digital form themselves. And what does that mean? It means they're exploiting data assets in new ways. Services are provided in a more seamless manner. Change occurs at a faster pace. And that presents a range of new opportunities and a range of new risks for regulators, policymakers, and the like. And if you look at existing models of regulation and supervision of financial markets, in many cases they're reliant on data that isn't real time. So it's one of the challenges, that they tend to rely on historic data, or they rely on sample-based views of the world. So they have a view of part of the system or part of the let's say the lending files of an institution or otherwise. So there's a sampling view rather than a population view. The regulation itself is written in natural language, often in some cases quite complex legal language. So there are some challenges around interpreting and implementing that regulation into institutions. And en masse, the burden of regulation, depending on the market and the nature of the entities and the jurisdictions in which it operates, the burden of regulation can be quite significant. And that can obviously present costs, complexity, room for error. But it also presents barriers to entry for new players, as that cost of compliance is one of the sort of baked-in costs of being a regulated entity. So that barrier to entry can also stifle innovation, stifle competition, and ultimately leave certain consumers underserved. So in any geography, there is a financial inclusion issue that needs to be addressed. In some markets more so than others. So I think there's a range of challenges, both in terms of challenges for the market, in terms of access for consumers, and then also just in the act of supervision, some challenges for regulators themselves. So I think a lot of what you've got in the manifesto and a lot of what we've been looking at, both in terms of our own support services for the market, but increasingly in terms of our own modernisation and our own transformation, is looking at how do we become a more digitally native, data-driven organisation? How do we exploit more profound technological capabilities than we have in the past? How do we build regulatory systems and technology systems that are scalable, flexible, modularized? But also looking at the regulation itself, the law itself, and contemplating, can we express that in a more machine native form, a more machine readable or machine executable form? So I think your manifesto sets out a number of these components around digitally native. Open source, I think, is an interesting component as well, the extent to which we ought to be leaning on open source as the sort of go-to standard, or whether we should be continuing to use proprietary systems and the like. That's another big question. But whatever we do, what we do have to bear in mind is that what we build needs to be secure, resilient, and protect things like data protection and privacy appropriately. So not an easy task by any means, but a number of issues to address and a number of thoughts in your paper about how we go about doing that.
Well, Nick, I'm curious because the FCA was one of the first regulators on a very short list, I think, of some of the most forward-looking regulators on the planet. And what have you learned in the process? And when you look at the manifesto, how does that kind of jibe with your experience and the lessons that you've learned? If you had it to do over again, is there something else you would do first or something you would do differently?
Yeah, I think there's a lot in the manifesto that echoes our experience. It's framed in a much more articulate manner than I would perhaps have been able to do so, but it does capture a lot of our learnings. I think one of the things the manifesto draws out is massive objects have inertia. Regulators and regulatory systems are built to be deliberate and manage risk, and therefore are quite cautious, and rightly so. Trying to move to a place where there is a more dynamic, more agile approach to regulation and oversight is quite a challenge. So one of our learnings really is actually the first steps that regulators take are some of the hardest. And we're some years into our innovation journey now, so we're able to operate at a slightly more significant scale than we were when we kicked off. But actually just making that start can be very, very difficult. I think we've also learned, and again, the paper draws this out, that in order to enact change, both within a regulator and within a regulated market, sometimes you need to strike the right balance of both excitement and enthusiasm about the opportunities that new technologies and new approaches may present. But in other cases, you may have to be a bit more, not pessimistic, but realistic about the downside risk of standing still. So the issue of just maintaining the status quo in an increasingly digital market and an increasingly fast-moving market, that challenge of using both excitement and fear to effect change is something we recognise.
I think that's similar when you say that. It brings to mind kind of two sides of the coin of protecting consumers and protecting the integrity of the financial services ecosystem, and including in that is some of the things we talked about last time, Joanne, around money laundering and using technology to be better at detecting that. But at the same time, I think one of the things that has been pleasantly unique about the FCA's approach is you've also embraced innovation as a way of enabling things. So not just preventing or controlling things, but really encouraging enabling technologies that will create better outcomes for consumers, better outcomes for financial institutions, and for the financial system overall. And so as you think about that balance, I'm curious how that has morphed over the years for you.
Absolutely, and thank you for the kind words as well. I think there's a couple of things I'd say in response. One is that as we've engaged with the market, the fintech market particularly, we have done that with a learning mindset, and we have come to realise and understand that a number of the technologies that are driving the fintech revolution also offer profound opportunities for us as a regulator to be more efficient and more effective. So I think we've benefited from the generosity and the intellectual capital of very many players in the market who have shared their thinking with us. We've also learned a lot from supporting experimentation. So things like our regulatory sandbox give us a great window into new technologies, new business models, new products, and provide a really valuable environment for us to experience those innovations at hand. But I think what's important also to remember about us is we do have a competition objective. Unlike many regulators, we actually have an equal objective to consumer protection and market integrity, which is around promoting effective competition. And we've been strong believers from the beginning that one of the best ways to do that is to enable innovative new players to come into the market, both to challenge the status quo, but also to offer brand new services and products. And an important part of being a pro-competition regulator is to really contemplate barriers to entry. And there is little doubt that in certain markets and certain fields, regulation itself presents a barrier. And so looking at how do you adjust the regulation without taking the safety rails off, how do you remove the bits that are unnecessarily inefficient is a really important area for both us and various regulators to take a look at.
Joanne, Nick talked a little bit there about sandboxes. Let's talk about your view of sandboxes. We've talked on the show in the past about kind of the wide range of views by state regulators in the U.S. and some of the battles that have gone on and what the intent of a sandbox is and is not. I mean, how are you viewing that in the manifesto?
Yeah, and one of the themes of the manifesto is that regulators have to have a safe space for testing and experimentation. I thought that the FCA was brilliant to launch this and call it sandboxes. I've always thought they did an amazing job and continue to of being simultaneously bold in ways that gets everybody's attention, but also humble and emphasizing that they're learning as they go along. But if they had announced that they were going to run pilot projects, nobody would have noticed. Those are a dime a dozen in the regulatory world. But when they said they were going to run regulatory boxes, it was a whole new thing. So people have taken offense. People say consumers are not playthings and so on. But call it something else. Call it a laboratory, call it a greenhouse. The wording doesn't matter. The important thing is that you need a place where the regulators can learn hands-on, closely looking at new innovation that may impact the regulatory framework around it, and where firms can start to get guidance in an iterative way that's not requiring them to spend massive amounts of money on lawyers while they're just getting started. So I think it's a brilliant invention, and I think every regulator needs a safe space like this.
Yeah, I mean, one of the challenges is that regulation is always going to lag innovation, right? Just by sheer definition, right? You can't regulate it if it hasn't been invented yet. And the earlier in the process you can be involved to observe and learn and understand the things that are happening, the better. But for some reason, there are some who have kind of taken the view that a sandbox is, a get out of jail free card that says, oh, you can mess around here in the sandbox and do whatever you want. And that's not the intent either, right? Innovation is about testing and learning. And if the regulators can be involved in that early on, that really should be good for everybody.
Yeah, part of the design of a well put together sandbox is that it's ring fencing the risk of impact on the public, on the consumer. It's a place where you can test something before you sort of let it out into the wild in the marketplace. And the FCA, I believe, has done a great job. There are many, many sandboxes now that have emulated what they've done, and some are stronger than others, but they've done a great job of being sure that the project underway has to help consumers directly or indirectly and has to be monitored. So if it's doing any harm, they can pull the plug on it and make people whole. So that's a key to it.
Yeah. But one of the other things, Joanne, I want to ask you about, and Nick, maybe I'd like to get your thoughts as well, is the manifesto has kind of a global view. And here in the U.S., of course, we have so many overlapping regulators, and it's easier maybe in some other countries where the regulatory scheme is a little bit more consolidated. But it appears to me that there's more conversation going on around the world from regulators and more collaboration than ever before. And you're advocating for even more. But could you talk a little bit about that evolution and kind of where we were, where we are, and where you think we should be heading with that?
Yeah, I'm a former bank regulator myself. I was deputy controller of the currency in the United States. And as you say, we have in the US a uniquely multi-headed financial regulatory system. And it makes things harder, and it also slows things down. It makes it difficult to make rapid progress. And one of the challenges to regulators in this environment is they're going to have to speed up because the tech is speeding up, but they're going to have to still do that carefully and with appropriate risk controls. I keep saying I think they have the hardest job in the whole space, but it's not easy to reorganize regulatory agencies. There was a little bit of this coming out of the financial crisis, including the creation of the FCA, but for the most part, we have what we have. And so what we need are new collaborative models that enable these agencies to work together. One of the things that we're doing at AIR is taking the input that we're getting and the people who are coming to us because of the manifesto and feeding that into what we are planning on now, a new initiative that we call the Regulatory Design Project. And we envision this as a public-private initiative where a lot of work can be done on a neutral nonprofit platform like AIR to bring people to the table so we don't have to struggle with which agency has what role. We can just begin to collaborate together on the big issues that are ahead of us. We're going to be doing a series of webinars on the big issues in the manifesto, and we're going to be launching projects starting with working on creating data standards for RegTech that can begin to create that foundation layer that makes the information interoperable.
Well, Nick, the FCA was out pretty early on this. You started thinking about this in 2014, and now you've got, I know a lot of regulators from around the world coming to you and asking for your advice and the lessons learned. How has the kind of global cooperation changed for you?
I think it's changed fairly significantly. I mean, regulators have always collaborated on an international basis, particularly around kind of core policy and, you know, the nature of regulation itself, be that capital regulation or indeed consumer protection regulation. There's always been knowledge sharing and to a degree co-development of those standards and those approaches. But what I don't think there has been necessarily is, until recently, has been as much informal sharing around approaches to supporting innovation, as much informal sharing around market monitoring and what we're seeing perhaps in terms of technology evolutions and fintech developments. And there hasn't been as much co-development or co-working around particularly RegTech, both the two fields of RegTech that are drawn out in the manifesto, both RegTech for its use in compliance within institutions, and then RegTech, or as it's often or sometimes referred to, supervisory technology, the use of technology by regulators themselves. So we're seeing a real significant uptick in international collaboration. We chair a global innovation group that was originally formed to try and facilitate international testing, so kind of multiple regulatory sandboxes working in concert to support cross-border tests and the like. But very quickly that group has grown. It now has representatives from every continent, best part of 60 regulators, central banks and others who are involved actively in that group, and has quickly added extra work streams around supervisory tech, has added work streams, particularly in the COVID crisis, looking at how do regulators perform remote supervision when they can't get on site. So, you know, just the nature of the dialogue has expanded significantly, but also the participant base has expanded massively. And so we have dialogue with regulators in every part of the world, from some very, very small regulators who are almost starting from scratch with their regulatory system, all the way through to massive federal agencies with decades of regulation sat behind them. And I think Joanne's right. I mean, in some cases, some of the biggest players have some of the hardest jobs. You know, it's often a reference that modernizing the regulatory system is like changing the engine on a car whilst it's on the freeway. You know, we cannot just stop to make these changes, we have to do it whilst maintaining the resiliency and the integrity of the system and the protection of consumers. So a lot of work to do, but huge appetite for international collaboration above and beyond anything we've seen in recent years.
Well, talk a little bit about how the financial institutions, the traditional financial institutions, have reacted to this, and I know that has also evolved over the years. 5 years ago, when this was new, some of the financial institutions didn't know what to make of it. But talk about how what they've seen from their side and the kind of feedback that you're getting.
So, I mean, I think it's dangerous to generalize, but I think in the early, if you think phase one of fintech, I think a number of the large institutions would have viewed them either as a direct challenger or an irrelevance, frankly, because their market share and their position was so dominant. But some would have viewed them as a threat, undoubtedly. And so I think in some scenarios that meant you saw fairly aggressive buyouts and acquisitions. Or you saw some defensive measures put in place, but I think that's changed, and we see a lot more partnership and a lot more working and collaboration between smaller startups and fintech players and the large institutions. We see larger institutions emulate some of the features and products that fintechs have brought to the market. COVID again has really accelerated this. I think that is. I'm sure I've heard it covered a couple of times on your podcast. That has been an accelerant for digital transformation generally in larger institutions. We didn't necessarily see the large players coming into our sandbox. I don't think they necessarily saw the need or the value to test in that way, maybe because they have such large pre-existing customer bases and they have most of the regulatory permissions they may require. So we didn't see large participation there, but we did see the big players come in when we ran major hackathons. And indeed, when we kicked off a piece of work looking at how do you effectively codify law and digitize regulatory reporting. And we've been very lucky, actually, that many of the large institutions, both in the UK and internationally, have come in and provided intellectual capital, resourcing, and thought leadership into that work. So you're seeing more collaboration. I think there is still the reality that big players struggle to know how to collaborate legally and effectively with one another. They're finding it easier to collaborate with the small players than they are their direct competitors, obviously. But I think in order to realize some of the vision and some of the ambition in this manifesto, you will need to see new forms of collaboration between the large incumbents as well. But no, an improving picture, I would say. But again, it's dangerous to generalize, of course.
Sure, recognize that. And from my perspective, a few years ago, I think a lot of the traditional incumbents felt like, oh, good, we can sick the regulators on the small startup because those that view them as a threat felt like there was an uneven playing field where, the traditional incumbents had a lot of regulations around them, and the fintechs perceived to have a lot fewer, and in some cases, even a very inaccurate perception that they were completely unregulated, which of course was never true. But Joanne, as you think about the different needs, as Nick says, it's always dangerous to generalize. So you've got multi-trillion-dollar institutions, you've got community-based licensed financial institutions, and you've got fintech players who are touching various parts of the financial system and the consumers' lives. I mean, how do you balance all that when you think about it from a regulator's perspective?
So one of the keys is that these RegTech solutions, both by the regulator and, as Nick said, for compliance by the industry, are cheaper. Once we get them working right, they massively reduce the cost. We know digitization makes things better, cheaper, and faster, and more agile. And so that's going to happen to regulation. People get skeptical about that, but it's coming. So that benefits large and small players, including in the United States, our smaller community banks, which are really stuck with a disproportionate regulatory burden and also stuck with a challenge of competing with fintechs and large banks that are using cutting edge tech, and some of the small banks can't do that. If we can get the regulatory system to encourage and bless the marrying up of the innovation community with the bank community on both RegTech and Fintech, it'll be good ultimately for the banks. It'll be really good for the consumers, and the costs will come down. The costs are very, very high of compliance. There's just no doubt about that in the system we have now. Nick mentioned the FCA's Digital Regulatory Reporting Project, and they have estimated that that will save billions of dollars, billions of pounds for the UK banks alone. And we need to be doing that across the whole system. JP, something I would like to mention is that in addition to the manifesto, which again, I hope everyone will comment on it at regulationinnovation.org. We're very humble about it. We know we don't have it figured out. We need lots and lots of input. But in addition to that, we're also about to put out a second white paper. Actually, it's our fourth for the year, I think, on the FCA. We did a case study we had former US regulator, general counsel of the OCC, study how the FCA has created this model that it has. And it's going to make for fascinating reading. So, and to get from, I knew them when it was a few people, and Nick, I know you did too. And today you have several hundred headcount in your innovation group, right? Counting the data science people, is that correct?
Give or take. I mean, there's about 140 in the division, and then, but we are in the midst of a very significant cloud platform build. So we have several hundred extra working on that at the moment. So yeah, a very large team trying to pull in the same direction. Yep.
So, people think regulators are slow, but it's only been a few years that they've been building this. And this is the future for regulators and for the industry as well, to bring this all together, to make it interoperable, to make it less expensive, to make it agile so that we can do regulatory updates as easy modern technology adaptations instead of giant IT infrastructure remakes and all of it. We just have to keep pushing.
Well, definitely a tall order, but I think one worth pursuing. So, Joanne, thanks for being back again, and Nick, thanks for joining us.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.